Alright guys, so I thought I'd make a video today to take away the pain from a losing streak I'm currently having on my funded account and hopefully provide some value for all of you guys. So basically on EU today, looking at the higher time frame, for me, um, we can obviously see that price is in a downtrend. So be it that it was a pretty impulsive move. We've come down here, we've dropped, we haven't filled any of this inefficiency, haven't come back up to mitigate the range, but still we just take it as it is. If price is still moving down, we just follow it. We don't try to predict. We just react to it. As we can see, price has reacted off of this supply zone, gone down, reacted off of this, gone down again. So we're respecting our supply zones and we're continuing to make strong highs and weak lows. And every single time we're making a weak low, we keep on taking it. So price to me, when I first got into price this morning, I was thinking to myself, obviously in a clear downtrend, so I was waiting for a return up to somewhere higher to hopefully see some downside movements. So I'll get up my stuff from today of what happened. Basically, coming into this, I think it was on the 15 second, yeah. So coming into, oh god, right, coming into price action today. So we just reacted off of a high time frame supply zone. So here we can see that price starts to protect our highs. Obviously reacting off of some sort of supply zone on the left. Price then goes out and takes this low and sweeps this demand zone and sweeps this and this. And you could also say this. No, we didn't sweep that quite yet. But you can see that price is showing intent to the downside after protecting highs. So we're seeing some sort of supply money come into the markets, which is obviously pushing us down. So from this, I wanted to see a further movement like downwards. Now, for full transparency, I took 2 straight losses on my FTMO today. That wasn't it. Yeah, so I had a 1 pip stop, and I think my trade looked something like this, and I didn't cover the high. So I took a loss on that. Then, out of my pitiful revenge, I tried to buy off of this, and then got stopped out. So obviously this is all done in hindsight, but I'm going to explain it. So hopefully, as time goes on, I'm now executing on these ideas better in the markets rather than taking buys on a week low on a funded account. So anyway, I digress. Back into price action. Price then once again fails to respect all of these demand levels and breaks all of them. So we're now impulsively moved to the downside again. So this shows further bearish intention. So you've basically got two places here that you could execute your idea on. So you've got this point here. I would class that as a bit more risky because you don't know whether price is going to come up after, let's say, breaking this, leaving this whole range here, and come back up to fill this area here. So you don't really know whether price is going to come back up or where it's going to mitigate. And if someone's saying they do know where it's going to mitigate, they're lying. You don't know whether an old book's going to hold or where exactly price is going to take. But logically, you would say that after we've had this this move here, we've had a range, we've reacted off of this demand. This demand has then not caused price to break this high, meaning that this low is now weak. We come down, that's impulsive, come back up, don't break this high, and then we come back down again. So you're taking a trade inside the impulsive leg of the move, so it is quite safe. But anyway, so this is how our first entry worked. As you can see, as price is coming down, it comes up into that bar there, comes back down, it forms an inside bar, forms a new high, and then takes the low. So you could have had a entry on the low with the stop covering the overall high, which is there. So that would have been a 1 pip stop loss. And you also could have taken this trade. So this trade works off of basically the first idea. They're the same sort of entry. You're just looking for a mitigation of that original zone that you could have entered off of. So this is the diagram that I've drawn for this entry. And basically, as you can see, we've come to this point here. That's the original entry. We've come back down. We've made what some would say liquidity on these highs. I don't really use liquidity anymore, but we've then taken this low here, taken that, so all of this demand has failed now, so price is then going to come back up to this zone and mitigate it. But at the same time, price could have mitigated this. So when you're taking trades off of order blocks or places that you are predicting that price will react off of, you're basically saying you know what the market's going to do, and no one knows what the market's going to do. So your best type of entries is when the momentum's happening, when you're at the higher time frame edge, and when you're getting in as price is delivering, you're entering as banks are entering. Well, not strictly, but you're entering as the momentum is entering into the market, so it's safer. Whereas this, we don't know whether price will come back up from this zone into here. So obviously this entry for me is a lot better. But anyway, for these trades, you could have had practical targets of what do you call it? So let's say so on a higher time frame, this would be our next low that we are probably going to take due to what do you call us reacting off of higher time frame supply. So you could have easily set a target on these trades to take this low, so you could have had it on the low, so when it sweeps it, or you could have had it below the low, so if you see a sweep of it. But yeah, that's basically it for today. I hope everyone got some sort of value out of that, or at least enjoyed me trying to film a video. But anyway, cheers.